The world's most indebted developer, Chinese property giant Evergrande, has revealed that in 2021 and 2022, it lost a combined $81 billion. The crisis-hit firm defaulted on its debt in 2021, and the results showed how much Evergrande has struggled amid a housing crisis that has rocked China over the past 2 years. The crisis was mainly fueled by government restrictions on borrowing by developers on the one hand, but also by consumers curbing home purchases during the COVID-19 pandemic. And now let's go to other top stories from around the world. Novartis has launched a $15 billion share buyback program after raising its full-year earnings guidance on the back of strong drug sales. The Swiss pharmaceutical giant now expects core operating income to grow by low double digits this year, up from a prior estimate of high single gains. The company has also said it's on track for the spin-off of generics division Sandoz in early October. Philippine President Ferdinand Marcos Jr. has signed into law a bill creating the country's first ever sovereign wealth fund. The creation of the Maharlika Investment Fund is aimed at accelerating the country's economic growth by optimizing the use of government assets. The MIF will pool funds from state banks and other government entities to invest in currencies, bonds, equities, and infrastructure projects. And police in El Salvador have arrested more than 100 Colombians allegedly involved in a money laundering scheme for gang activities. The government of President Nayib Bukele has arrested around 70,000 suspects since last year in a mass investigation to crack down on criminal activity. Nearly $20 million is linked to drug trafficking operations under the scheme. Now let's just go back to the China Evergrande story and let's try and understand a little bit more on this with Josh Mahoney, who is Chief Market Analyst at Scope Markets in London. Thank you very much for joining us today. Josh, how did we get here? First of all, can you remind us of the main steps that essentially led to China's biggest debt restructuring?
Yeah, look, this has a footing in the entire sort of developmental story of China. I mean, if you think about it, the urbanization of people within China into the cities, out of the countryside, that has allowed this big economic boom, facilitated and necessitated a great amount of housing to be built. That means that they allowed people to have cheap money, significant amounts of borrowing, and companies like Evergrande took advantage of that. With each time that they built a new complex or they bought new land, they were able to leverage that to take on more debt and be able to build more once again. As long as the housing market continues to boom, that's not necessarily a problem. However, we got to a point where the Chinese government clearly saw it as an innate risk within the economy that they've got these huge companies with massive amounts of debt, and they must have wondered what would happen if the housing market were to crash and what would happen if companies like this folded. So they start to rein it in. They start to limit the amount of debt that these companies can hold on their books. And suddenly they start to struggle. And ultimately that led to the company defaulting. They're now in a position where they're trying to restructure the debt. That means that some of their current shareholders or previous bondholders, have to exchange their debt for potentially shares. It might be in their housing company. It might be in their electronic vehicles subsidiary. But ultimately, this is a sort of back end of a process that has been a long time coming, and the ability to sort of stabilize things now is going to be really key for the Chinese economy.
Right, endemic problem then within the housing sector. But let's speak a little bit more broadly on China's economy, because we've seen it to grow at a frail pace in the second quarter. Do you think that the current government is doing enough? It's easing adequately to provide support to this slowing growth?
Yeah, it's really interesting because if you compare China to most of the other major economies around the world, China have the enviable position of not having to worry about inflation. Inflation essentially has been near enough zero for an extended period of time now, which allows them to do what they want on the stimulus front. That has been somewhat tentative so far, sort of cutting lending rates from the PBOC and things like that. But now we're seeing underwhelming growth, crucially underwhelming retail sales, fixed asset investment also underwhelming. We've seen a 28% decline in housing sales over the past year. So something has to happen. At the moment, and certainly this week, we've been hearing for a plan that's around about 11 regions within the country that are going to try and implore people to buy more goods, implore them to do up their houses and things like that. I don't necessarily think that's going to cut it, quite frankly. They're taking a somewhat tentative approach and implementing one thing after another. But certainly to kickstart the economy, I think they're going to have to enact a significant spending plan because clearly this idea that they're going to rely on domestic consumption is sort of floundering at the moment.
Right, inflation-wise, very different to the rest of the world. Josh Mahoney, thank you very much.